Trying to get a mortgage to buy real estate in 2023 sucks. Here's why. Hey, what's up, clever investors? Sperber here. Welcome to my YouTube channel. Super grateful that you're here. We're going to have a great conversation today about trying to get a real estate mortgage, money at a bank to buy real estate. Whether you're an investor or a retail buyer, it sucks in 2023. And I want to kind of unpack why that is. And we're actually out here in Miami. I'm here with Drew Loringer. He's one of the biggest, best mortgage professionals out here in Miami. You might be number one, dude. How many mortgages have you done?
Just over 3,000.
Damn.
Yeah.
So you know a thing or two about mortgages.
Yeah, man, we've seen it all.
All right, and you're in the dude. The thing with trying to get a mortgage nowadays is like the poor mortgage guy is like the one that everybody loves and hates.
We're like the worst guy in the deal.
Yeah, because you think about it, the realtors are yelling at you, "Come on, get the deal done." Yeah. The borrowers are like, "Really, you need another freaking document from me?" The banks are always throwing more stipulations your way, and it's just you're in that tough spot. And you're still driving deals to the finish line, but it's getting pretty hard. So what the heck is going on with mortgages
right now? It's different. And, you know, first of all, thank you for coming. Love having you here in Miami.
Your studios. This is Drew's studio, by the way. Isn't it dope? It's pretty dope. When you want a studio like this, if you're ever out in Miami and you want to rent Drew's studio, Drew's the move on IG and different social platforms. I'll put a link to him down in the
thank you, bro.
The description down below.
Appreciate the plug.
Yeah.
But yeah, man, we have seen a crazy shift in the market. I mean, in the last year, we've seen almost a quadruple in interest rates on all fronts. We're talking conventional, FHA, VA, USDA, non-QM, which is really my primary sector, home equity lines of credit, home equity loans. We have seen just rates skyrocket. And along with that, one of the things that has helped is we've seen banks have made it a little bit easier for buyers to qualify, but only special banks. And what I mean by that is the non-QM market is hotter than ever.
Explain to people that don't understand what a QM is or a DSCR loan is real quick.
So the QM market is the traditional mortgage product that you hear about, the conventional loan, FHA, VA, one of these government-backed loans. But a non-QM loan is a non-qualified mortgage, which means it does not fall into the guidelines for Fannie Mae and Freddie Mac, the governing institutions for conventional loans, or HUD for FHA, VA, et cetera. So these loans fall outside of their guidelines. Well, what does that mean in layman's terms? Because that's a lot of jargon. If you are not W-2 employed, work an hourly job, or have some type of steady employment situation, they don't want you.
So if I'm an entrepreneur, I roll up and I'm like, Drew, I want to buy this $750,000 condo here in Miami. Right away, you're like, okay, let's see what we're working with.
I already know where we're going.
Yeah.
Right? 9 out of 10 of them are going non-QM because the traditional banking system was not designed for self-employed people. It was not designed for business owners. It was designed for W-2 earners. It was designed for the worker bees, right? That's really where they want you. They want you in that position. So here's the thing. Like, you and I are self-employed. We own businesses, and our whole we don't want to pay taxes at the end of the day. Like, we're looking for every write-off opportunity available to us. We just spoke about this yesterday, right? And it was like, if you could write as much off as possible as a self-employed person, that's where your head is at. Not knowing that a year from now, you might have an interest in buying a place, whether it be a primary residence or an investment property.
I can't tell you how many years where it's like I would kill it in wholesaling. Yeah. And I'm like this is early on. I might have made like $250,000 wholesaling, and I'm paying all these taxes, right? 35% taxes at least. And I'm like, well, at least I can qualify for a mortgage, right? Yeah. But then you smarten up and you're like, screw this. I'm giving away all my money. I need to buy real estate, own real estate, keep real estate, get the write-offs, get the depreciation. And then all of a sudden your accountant is like, okay, here's all the write-offs we can take. And you're sitting there like, should I take it or do I want to qualify for a mortgage?
Exactly.
It's the worst position to be in because, like, obviously the right answer is take everything, play the tax game. That's why we're in real estate.
Take whatever you can get.
But then now I can't get a mortgage.
Exactly. Yeah. So traditionally that's correct. And if you were to go to almost any other mortgage bank, mortgage broker, or anybody in the game, they're going to tell you you don't qualify. Well, when I got in the business, my whole pitch was, how can I find a way to get those people to qualify? I don't remember who it was. I saw somebody's podcast, and they were like, if you can solve somebody's problem, then you can get paid for it. And it was like, the bigger the problem, the bigger the check. We've all heard that.
And you're a new mortgage guy, and you're like, okay, I'll take
So I'm like, Well, first of all, the market's saturated as shit when I come down here. Everybody's doing the same shit. They're all doing conventional. They're all doing FHA. They're all doing, these W-2 easy peasy deals for nurses and doctors and attorneys, right? And so I'm like, who's helping out the self-employed people like me? Because I can't qualify for a mortgage, and I was making good money at the time.
Mm-hmm.
And so what can I do for these people? And that's when I got into the non-QM space. And that's when I realized, like, oh, these people can get a mortgage. It's a little bit more difficult. It's a little bit more expensive. There's a couple other hoops that they have to jump through, but we can get it done. And I started going to all the realtors in the area and saying, send me all of your rejects. Any of your deals that died, any of the deals that couldn't get closed for one reason or another, send me your self-employed people, your business owners, your people who write everything off, your 1099s, the people that can only qualify with a P&L, people that just have a CPA and maybe they're months behind, foreign nationals, Colombia, Venezuela, Argentina.
Everybody here in Miami.
Everybody in Miami, right?
So now let's say I'm an entrepreneur. I'm watching this and I'm like, dude, I do want to be able to buy some rental property. I do want to, by the way, I don't recommend right now in 2023 having your main financing vehicle being traditional banks. We'll get to that here in a second. But let's just say I roll up and I am self-employed. I've been a wholesaler or a real estate agent or a mortgage guy or something, entrepreneur for a year. Yeah. Year and a half. Maybe I don't have 2 full years of tax returns and all that stuff. Do I have to have 2 years?
Well, that's a great question. So the first thing I'm going to ask is how long have you been doing it? Because that is important. A lot of banks, even in the non-QM space, need you to have your business open for 2 years. Some of them they don't even require a business as long as you can say you've been in the business for 5 or whatever you've been doing for 5 years. Right. So there's a lot of different nuances and there's different avenues, but I'm asking leading questions throughout the conversation so that I know based off 4 or 5 questions which route we're taking.
Okay. What are some of those questions?
Yeah. So the first one would be, how long have you been in business?
Okay.
Do you own an LLC? Do you pay yourself, on your own taxes? Do you pay yourself W-2? Do you take K-1 distributions? How are you paid? And so that's the first question I'll ask. You'll give me some, answer, whatever that is. And I know, okay, this guy doesn't have 2 years of tax returns. Or he wrote everything off. So I know that I'm going to have to go with the 12-month bank statement program. Do you have 12 months of bank statements? Are you actually making money?
All right. So let's say, making good money. I got 12 months bank statements.
Easy. Send me 12 months of bank statements. We'll get it done. I will add up all of the deposits from the bank statements.
Okay.
I'll divide it by 12. I'll assign an expense ratio depending on the business. And there you go. That's your monthly income. We don't need tax returns.
Got it. And now you're going to take me to what? Try and qualify for like a DSCR loan?
No, that would just be a 12-month bank statement loan.
Okay, 12-month bank statement loan.
Now, DSCR is great for investors that either have a lot of properties, they have a plethora in their portfolio, and everything's generating short-term rental income. The problem is, again, going back to the traditional banks don't want you to be self-employed or own a business. They do not count short-term rental income as income. So you could have... I have this all the time. Some of the top Airbnb guys in Miami use me as their broker. They're making freaking $2-3 million a year off of their portfolio, but the bank's like, I don't give a shit. We can't use that.
Dude, that's wild.
It's wild.
So backwards.
And they're so
it drives
upset.
Me crazy.
And these guys get so frustrated because they're like, I don't understand. The system was designed for me to lose because I'm making a ton of money. If I just, it's...
So what do they do?
Yeah, it's crazy. So with them, we'll go with a DSCR loan most of the time.
Okay, and explain what a DSCR loan is.
So DSCR is debt service coverage ratio loan. Essentially what that means, it's an investor cash flow loan. Essentially, if the mortgage is $3,000 a month and you could rent the place for $3,001, a dollar higher than the mortgage, you can qualify for the loan. No income docs, no tax returns, no W-2s, no 1099s, no income documentation whatsoever. And this has been a game changer for our industry. Last year, in the last 12 months, I did $50 million in loan volume, not purchase volume, in loan volume alone using this specific program.
Yeah. That's how I bought about 40 or 50 of my Airbnbs.
Yeah. Mm-hmm. All of my Airbnb investors use this.
Yeah. And it kind of killed my deal when the DSCR rate started going up because my cash flow ratios, they look at a ratio.
Yeah, exactly.
And if it gets too high, they're like, yeah, we can't, it doesn't cash flow enough to make it even want us to do the deal.
You know what? And that was happening to a lot of people. About 6 months ago, they changed some of the guidelines. And now if it doesn't DSCR or cash flow, right, by more than $1, we can still get the deal done down to a 75% ratio with 25% down.
Okay.
So even if it doesn't cash flow right now, we'll still get the deal done as long as you've got skin in the game.
Okay. So it is. And what are some of the other, are there more questions that you're going to ask?
Along the way, yeah. First of all, I have a progression to the way in which I ask questions. The first one is I'm thinking automatically, can I go conventional with this guy? If I can, that'd be great because he's going to get the best rate. Are we going to go primary, second home, or investment, right? The next thing I'm going to go for is going to be the bank statement program. If that doesn't work, I'm going to go with a P&L loan. If the P&L loan doesn't work, then I'm going to go with some type of stated income loan that I have. And then last resort, I'll go DSCR. Final resort, if none of that works, is I'll go with a hard money lender.
Wow. Okay, so there are options. Yeah. And let's say I qualify for one of those in your mind, like kind of like in the pre-gathering of information phase. The thing I hate about being an entrepreneur and getting a traditional loan is the amount of documents that you request. It is literally maddening. And this is why I started off with kind of like, you're like the person that everybody loves and hates because they love you when you get it done.
It's like a necessary evil.
You're like a property manager, dude. You're like collecting rent, like the tenant hates you, the landlord hates you. So how did it balloon into such insanity? Like me owning 6, 7, 8 businesses, and even like 6, 7, 8 businesses in the past that like have died out, but maybe didn't close down properly or something. Like I have to get so many documents where they're like, can you just write a 2-sentence letter on a piece of paper and sign it that just says this business is no longer making income, just sign it. And you're like, I really have to stop everything I'm doing to make one sentence on a piece of paper and sign it?
Well, in my team, we write the letters for you. Okay. And then we'll send it to you to DocuSign. Yeah. But, dude, you want to hear something crazy? I'll get to your question in a second. But last week, I kid you not, I had a lender ask me directly from underwriting, to ask my client for a reference letter from his mother on his character. It was a character reference letter from his own mother. I shit you not. Ugh. I've never seen anything like that. Ugh. That's insane.
And you're like dreading calling.
Well, I'm like, dude, I gotta call.
I would
this
just text that over.
I'm like,
I wouldn't even pick up the phone. I'd be like, I am not.
Well, I called him and I'm like, dude, you're not gonna fucking believe this. Are you sitting down? Because I talk to some of my clients like that. Like we're all buddies, and I'm like, dude, this is unreal. You literally won't believe it.
Yeah, it's so absurd at the and I just went through, even on the commercial side of things. We just did a commercial loan on a really great property. It took us almost 10 months. We went through 3 different lenders to get to the 4th that finally pulled it off at a 9.9% interest rate with like 2 or 3 points up front. Yeah. A massive prepayment penalty.
3-year, 5-year?
5-year.
5-year. That's common now.
It was just like everything. And we had to go through 4 appraisals. 4. We did a main appraisal, then it took so long, and we went to a different lender, and they're like, hey, it took too long, we got to do another appraisal. It was
more than 90
then
days.
It took too long, and we got to do a 3rd appraisal, and then the 4th person finally was like, I can use the 3rd appraisal, but we got to pay for an appraisal update. So we did all of these things, and then the appraisal came in at $2.65 million, which is what the property's worth. Yeah, it's a house with a pool and a 4-plex all on one parcel, so they consider it 5.
Yeah, it's a 5 unit. I just went through one of these,
and oh my God, at the last minute they go, we don't care what it appraised for. We're only going to lend off 60% of 2.2. What? Or 2.3. I was like, wait a second, we went through.
Yeah,
4 appraisals and an update, all of them appraised at this price, and you're still going to drop it back down to 2.3 and only give me 60% of 2.3. When I started this 10 months ago, we were at 75% of 2.650.
Well, I'm not surprised, to be honest. And
you see my energy? I'm just like,
it sucks. Dude, I have horror stories.
And guess what? We did it.
Yeah.
We did it because we have to. You don't have a choice. It's like you're 10 months in, you're just fatigued, and you're like,
well, dude, I don't think people don't
$100,000 in closing costs.
Jesus,
they took our profit. Like that's the game. This is why.
Yeah, but how much did you have in earnest money?
Well, I already own the property. This is like a refi.
Oh, this is a refi.
This is like a refi.
Wow.
Like we it's a whole thing, dude. It was we were already running it as a successful rental property. We were making $25,000 a month on this thing. It cost us $8 to own it up until that point. But it was a short-term hard money loan type of situation, and we had to get out of it. And
it ballooned on you.
We were forced to do it.
Well, I have horror stories for you. We could literally spend all day going through, but it has become frustrating. And to piggyback to your question initially, the reason why it's become like this is because a lot of banks just don't want to do deals. Believe it or not every bank is in the business of let's find a way to get it done. They're not like us. We will find a way to get it done. If it's not this lender, I work with 57 banks. I work with that many banks, not because I want to, but because I've had to. Because over the last 7 years, anytime a deal's fallen apart, I've had to save my client's earnest money deposit because they may be out of their finance contingency. And I have a responsibility to my agent who referred me to the business to save their commission as well. So I'm trying to save everybody's deal. The title company's got skin in the game. We've got skin in the game. The buyer's got skin in the game. Everyone's on board. We have to close this. And the lender's like, you know what? Screw you guys. Yeah. We don't want the deal. So now I have to go and I have to find another lender. Well, each lender has their own guidelines and each lender requires different things. And so not all of them make it easy for us, but I can tell you that where there is a will, there is a way, and there is somebody that will do everything for a price.
Yeah, for 9.9%, 100K up front and closing costs, 2 points.
Did you go DSCR with that? Was it DSCR
yeah,
commercial?
it was a DSCR.
And
I believe.
And they did a 1007 rental addendum, and they probably didn't use your short-term cash flow. They used a long-term rent.
Yeah.
Right?
Yeah, it was like a whole thing.
Yeah, that's crazy.
It's like a master class. You know, what happens to you if I do a loan with you and then I'm pissed off because I get into like a rate that I don't love, but I get the deal done and then I throw the property up on the MLS and sell it? Do they claw back your commissions and like unwind?
I kid you not, I just paid back a $42,000 commission.
I wanted to bring that up because us investors, we don't really understand the world of mortgages.
Yeah.
And it's good to really know, like, you could burn your bridge with your mortgage professional or your mortgage team member if you do that too many times. Like once, like maybe they're like, I totally get it. Like, this sucks. I worked really hard to get this done, and then now my commissions are gone. What's that timeline? 6 months?
6 months.
Okay.
Yeah. Well, no. It's not just 6 months. It's 6 payments.
Okay.
And you don't usually make the first month payment because it's deferred.
Okay, so it's maybe 7 months.
7 months.
Okay, so if you sell a property that you just did, like a refinance or a cash out or non-cash out, like you could claw back if you sell the property within that 7 month period, your team members' commissions, which would really piss them off.
Early payoff.
Yeah, that's
drawback.
Yeah, it's part of the business.
Well,
and hopefully,
the worst part about it is you not only have to pay back your commission earned on the deal, but you also have to pay back underwriting fees. You have to pay back third-party processing fees. So you end up in the red as a result of it. Oh, and you got to pay back the initial fees for the credit reports and everything. You have to pay back everything.
And probably, what's an average timeline for a loan right now?
To close? Mm-hmm. Well, it depends on the program. I mean, conventional still closing in 3 weeks. Non-QMs 3 to 4, but we're closing in under 30 days for sure. Now, there's a lot of people out there talking shit that they'll close a loan in 10 days. Unless it's hard money, that's bullshit. It's not real.
Okay.
Hard money for sure, I can get closed in under 10 days.
Oh, well, that's hard money. What are they charging out here in Miami for hard money?
2 to 3 points up front.
Yeah, but like, is it like 10%?
Yeah, it's between 10 and 12.
Okay, yeah. When I first got in the business, hard money was 18%.
Jesus.
Now it's, we got it as low as 7-8%.
Wow.
Now it's back up to 10 to 12.
Well, it's crazy because conventional rates now are what hard money rates were a year and a half ago.
Yeah,
we were giving out 7.5s and 8s, and people were like freaking out.
Now you do anything to have that rate.
You're like, dude, can I please?
This is why I love creative finance. So, I mean, look, we're kind of talking a little smack about the mortgage industry. Sometimes you got to do it. It is what's happening right now in 2023. Rates are where they are. It's tied to the 10-year treasury yield. Yeah. If that goes up, rates are going to go up, and the economy is shaky right now. Who knows what's going to happen? I predicted about a year and a half ago that rates will hit 8%, maybe 9%, and everybody called me freaking nuts because at the time they were 3%.
Yep.
And then it happened.
Dude, I was on a podcast a year and a half ago, and I was like proclaiming that it was going to hit 6.5, and people thought I was an idiot. They thought it was like ludicrous. There's no way it could hit 6.5.
Which is crazy because it's been 6.5 for 40 years.
Yeah.
Like,
but back then it was like, if you had good credit, you were getting a 2.9.
Yeah. But this is why I like creative finance. If you ever have the ability to bypass a bank, go directly to the seller, get the seller to participate in the loan. Down in the description down below, I'm going to have a link to a creative finance course. If you're watching this video and you're like, oh my gosh, this sounds like a horror story. I'm an entrepreneur. I do want to buy rental real estate, or I do want to get a loan for a personal residence or a secondary home or investment property. That I don't really want to go that route. Go take that class. It's called the Free House Formula. Watch that video, take that course, and master creative finance. There's 3 scenarios that'll happen in creative finance. They own it free and clear. They have a mortgage on the property, but they have little to no equity, or they have a mortgage on the property, they have a bunch of equity. There are creative finance situations for all three of those situations. And once I understood how to structure a sub-2 deal or a wraparound mortgage or a contract for deed or a sandwich lease option or a seller carryback, my whole world opened up. And you've heard me say this in other videos, that you do not in real estate have a money problem. Good deals, the money will find good deals. You have a creativity problem. Sometimes we got to use other people's money to close the deals, private money to close the deals, hard money to close the deals. We could get into these investor, loans and a DSCR loan. Sometimes you just avoid going to a bank altogether. If I never went to a bank ever again, and me and Drew were just gym homies. We just got back from the gym. That's why we're all buff right now and looking good. We got done with the gym and we were like, let's shoot this video because people need to know what's happening in mortgages. But if all I was your homie and I never had to get a mortgage from you, I'd be happy with that, because I'd rather...
If I didn't have to do mortgages, I would honestly be...
I'd rather just go directly to a seller and get them to participate in the loan, because there is an amount of paperwork. There isn't... I can close an investor... like a seller finance deal in 10 days.
Yeah.
I don't have to use my credit. I don't have to qualify for anything. If me and the seller have a good relationship and we work out a deal where I make them principal only payments spread out over 50 years, with no money down, no interest rate, and the seller says, cool, because you're giving me my price or even above my asking price, I'll give you all these other terms.
Yeah.
Once I understood that, and it's just like a game of chess, like how can I make it work for you and make it work for me? My whole world opened up and I'm like, I'm never going to a bank again. Sometimes you're forced to, but if you're not and creative finance, you can actually go build a massive portfolio. And what's great about real estate is it doesn't take that much real estate to retire.
Yeah.
Like literally you can have 10, 15, 25 houses and be done for the rest of your life. Like done. Sitting on a beach, drinking a drink with an umbrella in it, done. So, but if you're here in Miami, how can they get a hold of you?
You can find me on Instagram at Drew's The Move. That's the best place to find me.
Yeah, and they want to get a mortgage, they can DM you there.
That's it. Yeah, you can DM me there. You can find me at drewsthemove.com. I have a little landing page. Put in your information. We'll hop on a quick complimentary phone call. It'll take 5-10 minutes for me to ask the couple of questions that I asked here. We'll figure out the best strategy and we'll come up with a game plan.
And if you are a mortgage professional, follow this guy. He is building a great personal brand. I went out to dinner with him last night and he had, what does your shirt say?
Ask me about mortgages.
Ask me about mortgages, and he was just branding everywhere. And
I wear that thing.
People were coming up talking to him about mortgages and stuff. So, great personal brand builder, really gets the social game, and obviously is good at mortgages. You've done, a few $1 billion in mortgages?
Yeah, a little over 1.1.
Damn. All right. Well, anyway, thanks for watching, guys. If you got some value from this, drop a comment down below. Share this video with another investor that could get some value from it. Until next time, we're out of here. Take care. Comb your hair. Peace.